Times are tough, I know, and everybody's trying to cut down on their expenses, but you know what? Not all expenses are created equal. In this video, I'm going to show you how to manage expenses in an effort to build wealth. If it's the first time you're watching any one of my videos, hi, my name is Yolanda. I am a wealth advisor, and it is my goal on this platform to give you easy, actionable tips, content and strategies that you can use to manage money well, to live abundantly and build generational wealth. I have tons of content on this platform. Be sure to subscribe to the channel so whenever I put out a new video, you'll be the first to hear about it and you never miss any of the content that I put out. I'm also the director of Solomon Wealth Management. We are a wealth advisory firm and we work with South Africans all over the country and overseas as well to try and help you get your money right and build generational wealth. So let's talk about those 4 types of expenses today. So the first type of expense is a destructive expense. And by destructive expense, we're talking about the drinking, the partying, the smoking, the gambling. This is where the destructive expenses go. You tend to spend more on this than you do spend on the essentials. The next type of expense is the consumptive expense. Consumptive expense are things like your big screen TV, your vacations. Those are the things that are nice to have. They're fun to do. They are the spice of life, but they don't build income and they don't acquire assets. These type of expenses is where you need to be spending cash. All right, nice to have those things. I'm not telling you don't have them. I'm telling you to plan for them. Do not swipe the credit card. The only time you'll swipe the credit card is when you have enough to go and pay for that cash, but you use the credit cards because it's more savvy and you want those loyalty points. When it comes to a lot of these consumptive expenses, this is where, people wait to retirement to do the traveling, to buy the boat, to get the luxuries in life, but you don't have to do that. You just need to plan your money well. Don't give in to instant gratification. You want that TV, buy the TV, but plan for the purchase. The next type of expense is the protective expense. These are things like your emergency fund, your insurance, right? The things that you don't really see the tangible return every month, but you got to pay these. These are the expenses that you use to protect your personal risk and your personal assets, like your house, your car. It also protects your mindset and your financial peace. Because you know what? If you don't have an emergency fund and all of a sudden you need to pay 25,000 rands, you're borrowing for it. Maybe you can't pay it back in a month or two. You're borrowing over 12 months. Now you're accumulating interest. Not the best use of your time and resources. This is an area that gets overlooked a lot. Now, these type of savings, especially if you're holding emergency savings in the bank, they're not that productive. So we want to have a balance. We don't want to have a whole year's worth of income in a banking product, a traditional banking product. We want to be savvy with that. For example, we want to take a portion and put them into more aggressive and getting a decent enough, higher than bank returns, basically. And the 4th type of expense is a productive expense. This is the expense that allows you to build your wealth, grow your business, and accumulate assets. Might be investments into upgrading yourself, your education, your skill. It might be getting advice from a tax person or a financial advisor. Or it just might be putting in 1 rand to get back 2 rand in a year's time or 3 years' time. Investing, essentially. Essentially, your investments either produce cash flow or they appreciate in value, growing your pot of money. These are the kind of expenses that are going to enhance your life now and in the future. It's not something that just fiddles away like a consumptive expense or destructive expense. This is a thing that's actually growing. So this is how most people spend their money, right? They have consumptive expense here every month. Then maybe they have destructive, you're drinking, you're partying, you're gambling. Then they have protective, and then they have productive. Okay, if this is what yours looks like, you should have a plan to start increasing this. If this is consumptive, you want to bring it down a little bit. If this is destructive, you want to really cut down your destructive. If this is protective, okay, great. You can start building your emergency fund, and you want to expand the portion of your income and your cash flow that is productive. All right, that's the thing that's gonna make you wealthy in the long run, give you security and help you enjoy more of life. Spend more on productive expenses, less on consumptive and destructive expenses, and you should be on your way to building some serious wealth. Essentially, you want a spending plan to reduce this gap, reduce this, and get this bigger and get this bigger. All right, we're spending too much in these 2 portions here, and we need to cut it down if we want to be financially savvy.